What are commercial mortgage-backed securities, and why are they becoming so prevalent in real estate development deals these days?
In essence, they're a bank. Oftentimes, they were bank loans given by investment banks. Investment banks pooled lots of different loans that they gave to borrowers together and issued securities interests in those loans as a pool. So they would pool together $1 million worth or $1 billion worth of loans on 100 different properties all over the country. And as each borrower paid their debt service on a monthly basis, the bondholder would get paid. And the lowest tranche of bondholders would be the first loss. So over the period between 2000 to 2007, CMBS issuance, meaning new loans issued by CMBS investment bankers or banks, increased enormously and became probably more than half of all loans that were made to commercial real estate. Whereas probably in 2000, maybe it was an eighth or even less. And now those loans that were underwritten, I wouldn't say they were underwritten poorly, but I would say that they were underwritten in the good times and with good times expected ahead. Now we're in a little bit different situation and those loans are coming due. So that's why there's been so much discussion, and that's why there's a lot of opportunity in that realm.
Well, tell me more about that opportunity.
Well, the opportunity is that the way that they were structured, these CMBS trusts, they have natural resolution authority, whereas in, let's say, the mid-'80s, the government created the Resolution Trust Corporation in order to liquidate Savings and Loans Associations loans. The loans now are held by these trusts, but there's very specific ways in order to liquidate them if they default. So the bondholders get options on purchasing those loans. The special servicers who are managing the loans and dealing with the workouts get options on those loans. And they can also decide just to sell them to the general public. But one thing that's not going to happen is they're not just going to sit. They have been extended, but the special servicers don't seem to want to continue to extend loans that aren't paying.
And so that then affects you on a day-to-day basis?
It creates an opportunity for the repricing of debt that was issued in more heady times. And what that opportunity is an opportunity for me to come in some way in the capital stack, whether it's in the equity or whether it's providing additional debt. It's a way for me to find new deals. Mm-hmm. So it's provided a bigger opportunity for us, as opposed to waiting for banks to sell them, to sell their bad loans.